Every day, thousands of traders log in, charts open, hopes high. And every day, most of them lose. Some lose a little. Some lose everything. The harsh truth? 99% of traders fail. It's not because the market is unfair. It's not because luck betrayed them. It's because of predictable mistakes, emotional decisions, chasing trends, risking too much, and trading without a plan. Think about it. When fear rises, most traders panic. When excitement grows, most chase what everyone else is buying. They react to the headlines, the tweets, the hype, and they forget the one thing that actually matters: discipline. The tiny 1% who succeed don't follow the crowd. They follow a process. They control their emotions, manage their risk, and stick to a plan. In this video, we'll break down the harsh reality most traders never admit, why almost everyone fails, and what you can do differently. By the end, you'll understand the mindset traps that destroy accounts, and the strategies the few successful traders use to survive and even thrive in markets most people fear. Trading looks simple from the outside. Buy low, sell high. Watch the charts. Make a profit. But reality is much harsher. Most traders fail, and it's not luck. It's predictable, emotional, human. Fear and greed control decisions. A sudden drop triggers panic selling. A small rally triggers FOMO, chasing the next trade. Accounts bleed, confidence fades, and traders quit, often faster than they expected. Overleverage multiplies losses. A single bad trade can wipe out weeks, months, or years of effort. Add social media hype, news headlines, and the pressure to keep up, and even experienced traders can fall into the same traps. The truth is clear. Trading isn't about luck or skill alone. It's about mindset, discipline, risk management. Without these, the market becomes a test most fail. In this section, we'll explore exactly why 99% of traders fail. Not theory. Real behaviors, real mistakes, and real consequences. Understanding them is the first step toward becoming part of the 1% who survive and thrive. The number one reason traders fail is simple. They let their emotions control their decisions. Fear and greed are powerful forces. When a market dips, fear makes traders panic. They sell at a loss, hoping to escape further pain. When the market spikes, greed makes them chase the next big move, buying at the top. These reactions are natural, almost automatic, but in trading, they are deadly. Warren Buffett often says the market is a device for transferring money from the impatient to the patient. Emotional traders are always impatient. They react first and think later. They let headlines, rumors, and social media dictate their moves. Their trades are impulsive, short-term, and often destructive. The key is discipline. Step back, breathe, analyze before acting. Have rules. Stick to your plan. Don't trade based on fear, hype, or hope. Emotional trading isn't about knowledge. It's about self-control. And until a trader learns to master their emotions, their losses will continue. 99% of traders fail not because they don't know the market, but because they let the market control them. Another major reason traders fail is overleverage and poor risk management. Leverage allows you to control more money than you actually have. It can amplify gains, yes, but it also amplifies losses. A single wrong move can wipe out your account in minutes. Many traders ignore this danger. They risk too much on a single trade, hoping to recover losses quickly. They treat trading like gambling, not investing. Small mistakes become catastrophic because the math is against them. Risk management is simple in theory, but most fail to follow it. Set limits. Know your maximum loss. Use stop-loss orders. Never bet more than you can afford to lose. Never let one trade dictate your financial future. The market doesn't forgive recklessness. Even a skilled trader can be destroyed by poor risk control. The 99% who fail often do so not because they lack strategy, but because they ignore this fundamental rule. Protect your account first. Leverage and risk are tools, not shortcuts. Used without discipline, they become traps. The difference between surviving a crash and losing everything? Control your risk. Always. Most traders lose because they have no real plan. They open positions on impulse, guided by emotion or noise. They trade based on a hunch, a tweet, or a headline, not a system. But trading without a plan is like sailing through a storm without a compass. You might move, but you have no direction. A solid trading plan defines everything before you click buy. Your entry, your exit, your risk limit, and your goal. It tells you why you're taking the trade, not just what you're trading. Without it, emotion takes over. When a market drops, panic replaces logic. When the price rises, greed clouds judgment. And before long, one wrong decision becomes a chain of losses. The best traders don't guess, they prepare. They treat trading like a business, not a game. Every trade is a calculated decision, backed by structure and discipline. The market rewards consistency, not luck. If you don't have a plan, the market will make one for you, and it won't be in your favor. Plan the trade. Trade the plan. It's simple. But that's what separates the 1% from everyone else. The final trap for most traders is chasing hype. It's one of the easiest mistakes to make, and one of the hardest to escape. A stock starts climbing. Everyone on social media talks about it. You see screenshots of profits, charts with arrows pointing upward, and before you know it, you buy in. But by the time most people hear about a trend, it's already ending. The smart money, the early traders, are quietly selling while the crowd is buying. And soon, the price collapses, leaving latecomers holding losses. Hype-driven trading feeds on emotion, fear of missing out, the dream of quick profits. It feels exciting, but excitement and success rarely mix in the market. Real traders stay patient. They ignore noise. They study patterns, understand fundamentals, and wait for the right entry, not the popular one. Remember, trends don't make you money. Discipline does. The crowd will always chase what's shining today, but the 1% think long-term. They wait for the noise to fade and profit quietly after everyone else has lost interest. The difference between those who fail and those who succeed isn't luck, it's discipline. The 1% who survive the market don't chase every move. They don't panic when prices fall or celebrate too early when they rise. They understand that trading isn't about being right every time. It's about managing what happens when you're wrong. They think in probabilities, not emotions. Each trade is a decision made through logic, not impulse. They protect their capital before they chase profit, because they know, once your capital is gone, your chance to recover disappears with it. The 1% treat trading like a craft. They study patterns, learn from mistakes, and adapt constantly. They don't seek excitement, they seek consistency. When others rush, they wait. When others panic, they stay calm. Their edge isn't secret knowledge, it's self-control. And that's what most traders miss. Success in trading isn't about predicting the future, it's about surviving the present. The 1% don't try to beat the market. They learn to work with it patiently, one trade at a time. If you want to survive in the market, forget perfection, focus on discipline. Here's what the 1% do that most traders ignore. Number 1, control your emotions. Fear and greed destroy more accounts than bad analysis ever will. Trade your plan, not your feelings. Number 2, manage your risk. Decide how much you're willing to lose before you enter a trade. Protect your capital like it's your lifeline, because it is. Number 3, have a plan. Know your entry, your exit, and your reason for taking the trade. If you can't explain it, don't place it. Number 4, ignore the hype. The crowd is usually late. If everyone's shouting about a stock, you're already too close to the top. Number 5, keep learning. The market changes, and so should you. Every loss holds a lesson, if you're calm enough to see it. These simple rules don't guarantee success, but breaking them almost guarantees failure. Trading isn't a race, it's endurance. Survive long enough, and you'll outlast most of the competition. Most traders lose because they rush, react, and repeat the same mistakes. But now, you know what the 1% do differently. They slow down, stay patient, and protect what matters most: their mindset and their money. If this helped you see trading from a clearer perspective, take a moment to breathe, then plan your next move with purpose. Like the video, share it with someone who trades. And subscribe if you want more calm, real lessons about money and mindset. Because in trading, survival always comes before success.